Thank you. Good evening, everyone. I, Ashwini Jindal, extend a warm welcome to all of you on behalf of the Direct Tax Committee of the ICAI. Firstly, I did like to express my gratitude to the Chairman, Vice Chairman, and the dedicated team member of the ICAI Committee for promptly providing us with this invaluable technical guide. Today's webinar aims to provide a detailed breakdown of this guide, clause by clause, ensuring that every member of the ICI is well equipped to fulfill their responsibilities. This guide will not only benefit our members, but will also serve as a crucial resource when preparing Form 10B and BB, as well as when conducting audits of charitable and religious institutions. Thank you for joining us in this endeavor to enhance our professional expertise and knowledge in the realm of direct taxes. I welcome CA Sanjay Agarwal ji, Chairman Direct Tax Committee. I also welcome CA Piyush S. Chhajjar ji, Vice Chairman Direct Tax Committee ICAI. Now, I also welcome our expert panelist, again CA Sanjay Agarwal ji, CA Devan B. Shah ji, CA Bipin Vatavia ji, and CA Rajesh Mehta ji. Friends, now I am introducing one by one are all the panelists as well as chairman and vice chairman. First of all, I introduce CA Sanjay Agarwal ji, Chairman Direct Tax Committee, consequent to his election to the Central Council, first time in 2010 and re-elected in 13, 16 and 22. He had the opportunity of serving almost all the standing, non-standing and other committees of the ICI as chairman, vice chairman and as member. CA Sanjay Agarwal, a fellow chartered accountant from Delhi with over 36 years of practice, having vast knowledge, experience, foresight, and professional excellence. His impressive track record showcases his expertise and proficiency in diverse roles at the regional as well as council level. With a wealth of knowledge and extensive experience spanning various sectors, he is a sought-after speaker who has graced seminars and conferences nationwide, addressing pertinent issues of professional interest. Now, I am introducing our worthy Vice Chairman, CA Piyush S. Chhajjar ji. He is a chartered accountant practicing for the last 20 years. He is a son of our worthy ex-chairman ICI, CA SP Chhajjar ji, and he is a senior partner at Messrs. Chhajjar and Doshi. He specialized in direct and direct taxes, appellate as well as arbitration proceedings. He is a speaker on various topics of direct taxes, a member of External Committee of Reserve Bank of India, Asset Restructuring Committee, a vital contributor to WIRC publication on Vivad Se Vishwas scheme. Now, I am introducing one by one our worthy panelists. First, CA Devan B. Shah ji. He is a partner at Messrs. Bipin and Shah and Company, a firm established by CA Bipin and Shah with over 50 years of experience in handling matters related to charitable trusts. As a fellow chartered accountant with 25 years of experience, Mr. Devan has developed specialized expertise in taxation and other issues concerning charitable trusts and NGOs. His area of practice encompasses audit, income tax, GST, and more, with a particular focus on charitable trusts. Mr. Devan manages both direct as well as indirect taxes aspects for charitable trusts. In addition to his qualification as CA, he has completed certificate course in business consultancy studies from JBIMS and holds certificate as ISA and forensic auditor from ICAI. Mr. Devan is a frequent speaker at seminars organized by ICAI, CTC, BCA, WIRC, and has authored articles on charitable trusts in various magazines. Friends, now I am introducing our next panelist, CA Bipin Vatavia ji. He is a qualified chartered accountant since 1985, has been in practice under the banner Bipin Batavia and Company. His primary area of expertise encompasses direct taxes, audit, and the establishment and taxation of charitable trusts, along with related aspects of charitable trusts and NGO. He has a rich history of leadership, having served as president of Chamber of Tax Consultants in 2003-4 and chaired various committees, including the General Committee of CTC for 3 years. Actively engaged with committees at BCS and WIRC, he is also a co-author of a forthcoming book on charitable trusts published by the Chamber of Tax Consultants. Mr. Bipin has shared his knowledge through lectures at professional bodies, trade association, and other platforms, particularly focusing on the formation of charitable trusts. Additionally, he has contributed articles to various professional magazines and newspapers, predominantly on the topic related to charitable trust. Now I am introducing our another panelist, C.A. Rajesh Mehta ji. He is FCA and DISA qualified professional, has been practicing since 1996 at Indore. He is at present serving as Secretary General of All India Federation of Tax Practitioners, renowned as direct tax expert. He delivers lecture on wide range of topics including TDS, TCS, capital gain, search seizures, penalties, religious trusts, charitable trusts, tax audit, etc. He and ICDS at various branches of ICAI, Tax Bar Associations, AIFTP, Business and Trade Association, and online platforms as well. His insight on income tax provisions are frequently published in tax newsletters, magazines, etc. Mr. Rajesh Mehta's accolades includes awards for academic excellence and recognition in allocation and debate competition with honors conferred by the Chief Minister of Rajasthan. He has also held various leadership roles with AIFTP, such as Vice President, Chairman, and Secretary. Now, I invite our young and dynamic Vice Chairman of the committee, CA Piyush S. Chatterjee, for welcome and opening remarks.
Thank you very much, Ashwini ji, for setting the tone, for introducing all the speakers. My respected Chairman of Direct Tax Committee of Central Council, Sanjay Kumar Agarwal ji, the panelists for the day, CA Deven B. Shah, CA Bipin Batavia ji, CA Rajesh Mehta ji, and the moderator, Ashwini ji. A very good evening to all of you, and thank you very much for joining on this webinar of Direct Tax Committee, a very important webinar. Most importantly, in fact, only 3 days, 4 days before we had planned this webinar, and in such a short notice, all the learned panelists, including my chairman, who is a panelist today, and I am taking his job of welcome address because he is a panelist today, has agreed to address such a difficult issue of 10B, 10BB. And the difficulty when you actually are there for 2 hours, you will come to know what problems are there, what issues are there. But I'm sure with such a beautiful and such a worthy panelist, a lot of issues, a lot of questions will be resolved. For the benefit of the panelists, already 1,700 members are watching today. The members are waiting for a lot of clarification, a lot of issues, a lot of questions have already come. And I'm sure when you go ahead, more questions will be coming up. So moderator will have a very tough task to it. As I said, today I'm also stepping in the shoes of the chairman. So briefly, before we go on to today's seminar, I'll just like to brief on 2 or 3 important activities, which under the able leadership of Sanjay Agarwal ji, we have done at Direct Tax Committee. One is revision of tax audit guidance note. I think so now you are already placed with the book in the hand, or you may already have a soft copy. Please do look into it while you're performing the attestation function. Yes, the audit under 10B, 10BB, we have certain breathing time of 40 days now. Time period has extended up to 31st October. So you can concentrate well on the tax audit. Please do concentrate. Assurance function of tax audit is very important. If you look into it, my specific request to you that there is also change in authority to guidance note this year, which council have.
Sir, voice issue at your end, sir.
guidance note, you should follow. If you are not following, you are required to document what are the alternate procedures have been followed. So please keep that, please look into that authority. My request to all the members who have joined today and other also to your colleagues that please look into the guidance note. It is very important and it is an authoritative statement. Any decision taken, any view taken based on the guidance note is accepted by various revenue authorities, accepted by various court of law, including up till Supreme Court. And therefore, it is a very important regulatory document, regulatory support for the members of our institute. Coming back on the activities of DTC, under the Abel leadership, again, we had organized first time in the history a tax audit clinic in month of July at 164 branches. And at all our 164 branches, officials from Income Tax Department visited. Idea and the objective of that tax audit clinics was to increase the taxpayers, increase the awareness amongst them, and also support the individuals, small individuals, who are finding it difficult to file their tax returns. So all our branches supported in that activities. Department was a partner into that. They had given us a publication support also that, and it was very successful. Third, the most important, of course, there are a lot of other activities I'll not touch up because today's important is 10B, 10BB. Yes, draft technical guidance note technical guide has been issued on the audit of charitable institutions for issuance of audit report on 10B and 10BB. You would have received emails for any comments till today. Actually, the time was available up till today. If you have any comments on that technical guide, please do send us so that that can also be looked into by the groups and the committee and the chairman. And we'll try to incorporate that if found in order and the final version can be issued. Once the final version is issued, you can look into it. It will help as a repository to you. It will help you in discharging your assurance function. I would thank each and every group member who was involved. There were total 6 groups formed for the purpose of the technical guide to be prepared. And it was again reviewed by including the panelists which are today on the screen. They have also reviewed this and their support was always there. Plus that it was reviewed by other experts also. And please, again, I would tell you, this is the technical guide issued by a committee wherein the chairman himself sat for more than 10 days and read it word by word, which generally never a chairman does. He always tell me, chairman, chairman you have made me a writer rather than a chairman of a committee. So thank you very much, Chairman sir. Thank you very much to all the group members who have supported for developing this technical guide and which would be available for discharging. You have a time of now 40 days to read it, to digest it and apply it when you are actually doing your assurance function. So thank you very much once again. Now, I will again request the moderator to take over. I would request all the members to be attentive. If you have any questions, please do raise on the question box, whichever link you have given. I am sure the panelists, the eminent panelists which is available today will try to resolve all your issues. And I am sure when you sleep today, I'm sure whatever stress you had about these charitable institutions would be cleared to a lot of extent. And if you are still not able to sleep, then we'll have another seminar and again call up the eminent panelists. But our duty, it's an objective of our institute and the committee that all the members should be guided to the last point. And my last suggestion and it's my personal view that in case whenever you are doing a tax audit, whenever you are doing the audit of charitable institute, I do get a lot of recommendations that why this cannot be a postponed. Please do not think that this is a difficult task. It's a challenging task, definitely. But you should always feel that the department has reposed the confidence in. Because it is difficult, because it is challenging, that's why they've chosen that only a chartered accountant can perform this function. They can do a justice to it. Please feel it like that. Do it. If you were not charging being a charitable institution, please do charge. That's my suggestion. Obviously, I leave it up to the individual wisdom. Please do charge for it. And please discharge the function, the confidence which has been reposed by the department by giving you such a challenging audit. Thank you very much. I would once again now request Ashwani-ji to please take the session ahead. Thank you very much.
Thank you very much, sir, for the nice words. Now I invite C.A. Sanjay Agrawal-ji, Chairman, Direct Tax Committee, for the further proceedings.
Thank you, Ashwani-ji. Thank you, Devesh Bhai, for giving us time. Vipin Bhai also sharing his valuable time coming to BKC, and also Rajesh Mehta ji. My vice chairman has spoken much about it. I have not done that much duty, but the thing is this: what we have decided now, the topic and clauses have been divided among the three panelists. So we will request first Devang Bhai to take the clauses, address the member for 20 days or 20 minutes or so. Then we have received certain queries from the member. We have also got certain queries from various experts. So we will try to correlate those queries with our technical guide. And wherever it is not possible, we will try to answer those queries. And the queries which you can raise in Q&A box after you listen to the all the three panelists, because they will be answering those queries. So the queries you posted around 7:15 or so that we can take those queries, and the queries which are answered are not once again before us. So because we are live, so we have to compile everything live. So please listen to the various queries on the clauses which will be addressed by the panelists. So panelist one, CA Devin V. Shah, will be dealing with the clauses 1 to 8, 24, 25, 26, 28, 29, and 30. And then Vipin Bhai will take the clauses 9, 10, 11, 12 to 22, and 26, 31, 32. Rajesh Bhai will deal with 23, 27, as well as in the form 10B also. Similarly, Deven Bhai will take 1 to 8, 32, 33, 34, 41, 42, 43, 9, 11, 1, 11, and 12. So on with similar in 10B with Vipin Bhai and Rajesh Bhai. We are trying to cover all the schedule, all the clauses, and wherever it is possible, we'll try to correlate, and the issues which you will send to us, or if you still think that there are certain issues which could not be answered by 8 o'clock or so, please send it at dtc@ici.in, marking the charitable trust and the reference to the today's webinar, so that we can take those also while finalizing the technical guide for you. And we'll try to give you a comprehensive technical guide. So far in this technical guide, we have laid stress on more on management representations, because there are clauses for which we need to rely on the management representation. We have also placed more stress on the observations, qualifications, on certain presumptions, certain views which are required to be taken. We have also tried to explain to the auditee that what the information they are supposed to provide in management representation, engagement letters, and we have also guided the auditor that in case there is a difference of opinion between the auditee and the auditor, then the auditor must bring that thing that he is not agreeing to the views of the auditee, and that views should be presented in the observation clause. There are certain mistakes, what I will say, maybe which might have escaped the maker of the form, or because it is so comprehensive that certain places you need to report again and again certain items. But we will, and we have already compiled approximately issues which are in numbers approximately 30 pages, which we are going to provide the board approximately 23 issues, which we have already pointed out, or we have already compiled when we were examining this 10B and 10BB. So do raise the queries which are in your mind, and the queries which are given to us by the panelist or otherwise, which needs any improvement in the form, that is required to be. And once again, we are getting a lot of, you can say, mails or reference or talk whenever we are going in the public, that we should see and we should tell the board that this form should be deferred for at least 1 year. But I'm once again saying, as my vice chairman has said, and I support him, that we should not go for any deferment. But we have already represented, and your institute has represented for the extension, and we have been given that extension. So, in next 1 month after 30th, please comply, and wherever it is not possible or wherever it is difficult, please give in the observation or qualification para. So with this, I now invite now I give the charge to Ashwani ji for inviting panelists one by one.
I now request CA 10B Shah ji to start with the today's deliberation, sir.
Good evening, friends, respected chairperson, vice chairperson, my fellow panelists, and friends in the seminar. I will be covering basic details, specific violation, specified income, and specified persons. Especially all these clauses would be covered by me. And we'll start with the first basic details, where the PAN of the auditee. Now in this PAN, the PAN number that is there has to be given, which is there on the income tax website also. And along with the PAN, the name of the auditee. Now the name of the auditee as per the income tax portal has to be taken. Here one attention has to be taken of the fact that a trust or a society which is registered under a specific act will also have its own certificate of registration. And the name as per the certificate of registration in many cases is different from the name as is given in the PAN card. Now, in such cases, it is advisable to make the necessary modification in the name of the PAN card. And also, after making the necessary modification, you have to inform the AO, because once you have taken your 10AC registration certificate, you are supposed to make intimation of whatever changes that you are doing. However, this will not affect the registration because it is just a discrepancy in the name which has been rectified. Third is the assessment year, which is assessment year 23-24, which is auto. Then the previous year, which is from 1/4/23 to 1/4/22 to 31st March 23. Then the next concept, which is the registered address. Now, this registered address is a new concept. There was no provision of a registered address earlier. Or what they simply that the address given in the PAN is what has to be given here. However, this could be different from the registered address for which the trust has been registered. Now, if that be the case, we have to take necessary precaution and make the registered address the one which is there in the certificate of registration of the trust and communicate it to the income tax department. And if the registered address as per the PAN and the deed is different, then the necessary observation should also be given in the audit report. That is very important. Now, another new concept which is added is other addresses. This entire concept of registered address and other address has come in because of the introduction of Rule 17AA, books of accounts to be maintained by an assessee, which is there in which came on 10th August 2022. Effective that date, as per Rule 17AA subclause 3, any trust which is registered and which has maintained books in any place other than their registered address would have to intimate the jurisdictional assessing officer within 7 days of the resolution being passed to keep the books at the some places. Now, what happens in such cases is that these other addresses, in many cases, it has been noticed that other addresses, the books are being made. And the rule book, the books which are prescribed as per the rule, there are 18 types of books which are given and various documents. So if you have a branch where you are only maintaining a receipt book, that is also books of accounts for the purpose of this section. And if you are maintaining, let's say you have a branch in Dhule and you are a main office in Bombay and you have your account receipt books in Dhule, then you have to intimate the assessing officer that you are maintaining records at Dhule also, by way of a resolution and inform him within 7 days. If that has not been done, appropriate observation and clarification should be made. My advice is, if that is not yet done, before you file the 10B, you sign it off. And since there is time, you should file the letter with the jurisdictional assessing officer, where the assessee is being assessed that there are these books which are being maintained, and the necessary report has to be given. Okay. Then the next one is whether the oddity, the type of oddity here, it's just a standard one, whether it's a trust or a society or a company or some other entity. Now, if it's a trust, then you have to take that. But if it's a society, in the state of Maharashtra and Gujarat, a society has also got a dual registration, as in it is registered as a society as well as a trust. In this case, the registration of the society should be taken as the registration document. And whether the oddity is established under an instrument, if the trust is registered under a deed or a will or a society, if it's a society, then if it is registered under the memorandum and articles of association, then it is registered with an instrument. However, there are many cases where they were trusts which were there before 1950 and they were an oral instrument. In that case, subsequent to the incorporation of various acts in the various states, all states do not have Charitable Trust Registration Act. Like in Maharashtra, you have the Bombay Public Trust Act. Every trust which was registered, which had to file an application, that application can be considered, and accordingly you can tick a yes in the case of instrument registered under the trust. Also, another point that you have to keep in mind is all these are already being submitted your application under 10A of the trust. So please take care that what was submitted at that time and what you should be reconciling with each other, failing which it could lead to the trust. This takes care of the first 8 clauses. Then we have the registration details, which is there only in 10B, but not in 10BB. Here, what is required is that if a trust has got a provisional registration, of the provisional registration has to be given. If the trust does not have a provisional registration, or if it has a provisional which has been converted into a final before the year end, then only the final registration certificate has to be given and not the provisional one. Whatever is the final document that is for which the trust has been registered has to be given. Similarly, for 80G, the certificate of registration, which is the final, has to be incorporated. Here, one point which we all should take care of is, we have noticed in many cases, the trust had taken registration originally. They already had a 12A. When the new 12AA new provisions came in, the trust applied. However, erroneously, they applied under 12A1 AC 6, and they got a provisional registration for 3 years, and they've been continuing it. Now, if you as an auditor are aware that the trust had a 12A earlier, and just now they have got a 10AC of 3 years, then it is better that you make necessary observation in the report. And further, there is a circular in May 2023 where if such an anomaly has happened, you have the option to withdraw the earlier registration and apply under 12A1 AC1, which is the old 12A, and get the registration for 5 years. Subsequent to that, we look at clause 10, which is going to be covered by Vipin Bhai, objects. Now here, in the objects of the trust, there are 8 objects which are given. There are 7 objects as per section 215, and religious objects is also incorporated here. And this same provision is there in the ITR, and also when you have filled up the form 10A. So the objects of the oddity has already been reported in 10A, has already been reported in the ITR. So they all have to be aligning and matching. If you have reported that it's an educational, medical, and preservation of environment trust, and here if you incorporate only educational and preservation environment and add GPU, then there could be a query. So you please take care. Also, it's also important to go through the deed once again, because now everything is on object. If its objects are given and if you have not incorporated it properly, you need to get them amended accordingly. Further, since this 10B is applicable to a trust which is registered under FCRA, in form FC3A, you are supposed to fill out the object for registration, when you are applying for registration, and in that the objects are not the same as that are given here in the Income Tax Act. In FCRA, the 5 objects that are educational, social, cultural, religious, and educational, social, religious, and cultural. Now, in that case, if you are having any other object other than this, if you have put educational in the FCRA and you've not put it here, it could be a violation in the FCRA provision. So both those clauses need to be clarified and looked into. Now, next is whether, with reference to the modification of the object. This is a very tricky one, because here all that has to be done is only if there is a modification in the object of the trust. Only, and if that is material, then you need to report it. If there is a modification only in the rules, which is not going to affect the functionality and the continuity of the trust for the objects which it is there, then there is no need to report in this clause. So whether, now, so if there are any other modification, now the only issue here is there could be a very tricky situation, is that the trust has applied for a modification. The modification in the case of states like Maharashtra, Gujarat, has to be approved by the charity commissioner. So the trust would have passed a resolution where they have said these are the modifications, and that resolution would be but the charity commissioner would take its own time to pass the order. So this application should be made once the order has been passed by the charity commissioner only. And in other cases, as soon as you have passed a resolution and then there is no authority or body where you have to inform, then you should do it as per the resolution as the base of the case. Next, we go to specified income, which is under section 115 BBI. Now, this one this year has also made it even more complex, because in BBI, they have added certain provisions whereby a trust has to be paying tax at the rate of 30%. The benefit of the basic exemption that was earlier available to a trust has now been all withdrawn. Effectively, what happens is, for any trust, any surplus after the deemed application of income under application of 15%, and if the trust has not done accumulation under 11.1 for 1 year, or under 11.2 for 5 years, then whatever is the surplus would be liable to tax at 30%. So even if there is a of income and after 15% an expenditure, yes, sir.
Devin bhai, when you take the clause number, please announce so that control room should show on the screen that clause.
Okay, sir. Thank you.
10B.
Ma'am, please go to clause 33. I have not taken 32 because 32 is the taxable income, which is an auto-populated figure, and that will be covered by Rajesh bhai and Vipin bhai. And in that, the final figure of the taxable income is what is the figure that will come here. And also, I will be not touching on anonymous donation, because anonymous donation is there in 23(6) of the 10B, which is also being covered by Rajesh bhai. Okay, so specified income is where, and so in that case, sorry, coming back to the specified income part. So any surplus, if you have any surplus, my advice is you please accumulate it under 11.1 or 11.2. If you are not going to accumulate, then whatever is the balance, even if 30,000 rupees, the same would be liable to tax at the rate of 30%. So whether we like it or not, that is the law, and that is what has to be followed. Basic exemption is not one second. Income. Second, also, if a trust has accumulated under 11.1 and the amount has not been spent of the previous year, then the same would be liable to tax under 11.1B. Further, any accumulation under 11.2 for 5 years, which has not yet been spent, would also be liable to tax at the rate of 30%. And in this, please take care that 11.2 accumulation is available for 5 years, and with effect from the previous assessment year, the period of accumulation for which we could spend in the 6th year has been withdrawn. As a result, AY 17-18 and 18-19 are becoming taxable as per the utility and the ITR. Third one is benefits to given to any specified person. Now, if in this case, if there is any benefit which is given to any person who is a specified person for the purpose of the trust, which we are covering in the next clause, would be taxable in the hands of the trust. And who are the specified persons? The specified persons for the purpose of this section are the author of the trust, the founder, anyone who has made a substantial contribution in excess of 50,000 to the trust, any member of the HUF of any of the above, any trustee or manager, and any relative of the above. Now, the word manager, they have added the word manager. There is no definition of the word manager in the Act. But manager as is given in the case of Maharashtra, in the Bombay Public Trust Act, they have defined a manager. In that, they have said that the head of a mat or a mutalif of a wakaf is also a manager and is also considered as a trustee. And in the definition of trustee in the Maharashtra Public Trust Act, they have said that trustee includes a manager. So these heads of mats and all would also be covered. So you can take that analogy, stretch it a bit further, and even the gurudwaras and the churches, the parish priests and all would also be covered under these provisions. Then comes the other violation, which is if you have invested contrary to section 11(5) and you have any income in relation thereto, then the entire income in relation to that investment, which is in contravention of 11(5), would be taxable under 115 BBI. The last one where 115 BBI would be applicable is when application of income has been done for any foreign expenditure or a foreign purpose, which is without the permission of the board. So any income utilized for any foreign expenditure without specific approval of the board would also be liable to get taxed in this case. Now, in this case, in Form PB, only the gross amount charged in 115 BBI has to be given. So what I would suggest is that for that, in the case your only 10 BB is applicable, please keep appropriate working papers and notes. Because in the case of 10B, the detail has to be given in each clause and the amount also has to be given for each clause. We discussed 13.3 specified purpose, but in clause 42, I think, which is one of the worst clauses, where they are going to clause number 42, ma'am. Yeah. Correct. In 42, details of transactions referred to in 13.2. All these transactions, wherever there is an anomaly, would get taxed under 115 BBI 13.1C. Here, they want us to know, they would also want us to know whether any part of the income or the property of the trust is lent to any of the specified persons given above. Any land, building, or other property has been made use of for any of these specific persons. Now here, if you click yes, so if there is any land or building which is being given to any specified person, and if there is adequate compensation, rent or no, has also, so you have to fill up the schedule. The schedule SP requires the auditor to report whether the rent that is charged is reasonable or not, and also whether the rate of interest, if any, for loans given to the trustee or the specified person, is it reasonable? Any salary which is being paid to any of these personnel, whether it is it's reasonable, and the rent, whether it's adequate. I would suggest that if there are huge amounts of rents, make appropriate notes in the notes on accounts. And if you feel that there is any violation or there is an inadequacy in rent, you please take a report from the management related to the amounts being given. I forgot to mention earlier, in 13.3, the specified persons, we can also give, clause 41 was there, requires the detail of all the specified persons to be given. And if any substantial contributor has given more than 50,000, just go up, ma'am, please. Go to clause 41. Yeah. In this clause, all the specified persons have to be covered. That is the author, founder, trustee, manager, substantial contributor, and any relative or concern on any of these. In this, you have to give the name, PAN, Aadhaar, and the address. And if it's in a code 2 means if it's a substantial contributor. So if in the case of a trust, there is someone who has contributed 5,000 over the last 15 years, then the total amount contributed by that person is 75,000. Then even he would fall under this category, and his details, relative, and all those details would require to be given. Now, to actually fill up this data would be a humongous task for many trusts. What is there is a circular issued by the department in 1974. It is circular number 143 dated 20th August 1974, where they have said that in such cases it would be okay to take a certificate from the management stating that these are the specified persons as per the trust and the managing trustee. An appropriate note needs to be made in this case. Even the manager should also be included in this case. Now coming to the reason, so and further for clause 52, the reasonableness and adequacy of that appropriate notes should be made if possible. Yes, sir. Last.
No. In this contributor, I want to draw the attention of the member toward the Form 7. Form 7 talks about received during the previous year. So what we have given in our technical guide, that this should be taken care, because we are bringing this issue towards the board also, that there is seems to be it is just an impossible task to find out that in how many previous year. So the intention is clear from the Form 7 that during the previous year. So we are just talking about this point, that we should look to the Form 7 also. And
I think the ITR 7, sir, you're right, sir, is correct. And I think that is what should have come here. It would be much easier then.
Sorry to disturb you at this stage.
No, sir, please. In fact, while filling up this detail, even you have to take care that if trust is registered under ATG or as FCRA, details of donations received from individuals above 50,000 is already there with you. So those have to be collated and incorporated in this clause. Last clause that we will take up is the specific violation. Now, this is one of the worst clauses which has been incorporated, whereby Section 12AB subclause 4, if any of the violations are triggered, the trust could lose its registration and 115 TD would get triggered. And if 115 TD gets triggered, the entire net assets of the trust would be liable to tax. Now, in 12AB4, the specific violations that are covered are applied any of the income which has been applied for objects other than the objects of the purposes other than for the objects of the trust. Another, the subclause 2, which is a very, very important clause, and I would like to just speak a bit on that, is whether the auditee has income from profits and gains of business which is not incidental to the or attainment of his object, or separate books are not maintained in respect of business which is incidental. So you have to be very careful here, is that if you are having any incidental activity as per the 215 proviso, if you have incidental activity, you are supposed to maintain separate set of books of account. Please maintain them, because if the books are all one, then this clause could get triggered. So even though you have incidental activity, because books are not maintained, 12AB4 violation is triggered and the trust could be in jeopardy. Secondly, PNG of BOP, which is not incidental. So if you have any activity which is not incidental, it would get covered. Third one is any trust which has been utilizing its income for private religious purposes. Fourth is if it is for any particular religious community. In the particular religious community, recently there was a judgment of Sindhi Seva Samiti versus CIT exemption Ahmedabad, where the 12A registration was the matter went to IT. CIT exemption denied the 12A, matter went to ITAT. ITAT sent the matter back to CIT to examine whether the expenditure was only for the specific community or for the general public in large. What it wants to indicate is that if you are having specific community trust and you're not spending for general purpose, then it could be a trigger. The other clause which is there is the violation of any other law. Now, what here we have to take care is any other law should not be read loosely, but any other law where it is material to the functionality and the existence of the organization which should be looked into. Then the last one. Now, this is not there in the 10B, and this has been incorporated by the Finance Act 2023, which is subclause C of 12AB4, where application in 12AC is not complete or it is containing incorrect info. Now, this clause is applicable with effect from 1/4/2023, but there is no provision to give any details related to the same on this clause here. Now, because it is applicable it's there in the Act, it has to be looked at. So if there are any violation related to any of these, the last clause should be made and an observation should be given. According to me, in all the clauses that we discussed, it is pertinent that all the chartered accountants, all my friends, please make appropriate notes and make necessary observations and disclaimers wherever possible. I think I've covered my clause. Thank you.
Now I request another panelist, CA Bipin Batavia ji, to please start the deliberation on another clauses.
Good evening, everyone. First of all, I will thank Institute, particularly DTC committee, and in most particularly Mr. Piyush Sajed, who referred my name for this today's lecture or panel discussion on 10B and 10BB. Chairman Saab, under your leadership, the Direct Tax Committee is working excellently. And in a short time, you have brought a very lengthy, nearly 285 pages of technical guide, which is still under further improvement. So far as charitable trust taxation is concerned, I would like to say just few things. In last 3 years, you all will agree with me that the provisions of charitable trust has changed to 360 degree. There are many serious amendments have been brought in last 3 years. There are many circulars have been issued, notification has been issued. Maintenance and keeping of books of accounts have been incorporated, and finally these two extensive audit reports, which are in 10B and 10BB forms. Not only that, over and above that, 2 Supreme Court judgments in one Ahmedabad, Urban Development, and New Noble Education Society. Those also have made changes in 215 and education and profit and solely words extensively discussed, and new looking at the provisions, or rather interpretation. Even interpretation of 215 in ODA, after 11 years it has come. So this is a position, I think it has become very difficult. Fellow chartered accountants, trustees apart, I don't think very few trustees may be able to understand all these provisions. Even in my practice, I have observed accountants are also not in a position. That is why such programs are useful for them. Not only that, we agree with that what Mr. Piyush has said. We are trained in such a manner, and our confidence level is so high, we are capable of delivering. It is challenging task, but certainly we are capable and will do it. Because in past also, you all will agree with me that so many such amendments, ATHSC and so many transfer pricing and so many things. Tackle all these things, now it's become normal. So with this few remarks, and one more thing I want to say. The compliance has gone so high and so much of compliances are to be done. Now many allied trustees are thinking to leave the trusteeship. No new trustees who understand these laws and provisions and requirements are not agreeing to become trustees. So this is the one of the impact, or this is the one of the results of such amendments. Like corporate, they need compliance director. So here also the time will come, the bigger trust will need compliance trustee. with this opening remark about the charitable trust amendment, one more thing is all amendments, judgments, notifications, circulars have come in short period. Very short period of 3 years. So that is why the burden and the pressure has gone very high. And time is not given sufficient. As we requested them to defer 1 year. That they didn't listen to it. They have their own reasons for that. It's okay. And not only that, 10B and 10BB forms were not put into public domain for discussion. Not even institute was also discussed for that before bringing the amendment and the provisions. We are allotted 20 minutes to cover our topics which is given to us, and I start covering the topics which are given to me. But I think to complete the whole, clause by clause discussion on this topic, I think we require not the full day seminar, but at least half day seminar is necessary. In 2 hours, it will be very difficult for us to give so much detailed information, but at least so many lectures and so many articles have come up on this topic. So people will be somewhat, they will be capable of understanding in the short time. Moreover, this technical guide will be useful to all the members, and all chartered accountants practicing on charitable trust all over India, at least will have most of the cases similar observations, because this guidance note will be very important for all of us. So clause I will cover with 10B. My first clause is clause 10. Is it there? Yeah. So clause 10 is management clause. See, every group has got given the side headings. So management heading, they have given one clause number 10, where the details of author, founder, settler, trustee, member of society, members of governing council, directors, shareholders holding more than 5% in Section 8 company, office bearer. So he to provide the list of those people who are in the management, and they consider these are the people are under the management, whatever is applicable. In fact, if it is not a Section 8 company, then those directors and shareholding will not apply. Second thing is, I have found there is an issue that whether 13.3 is to be covered here. Those people, specified people, what Devan has covered, that it's to be given here. My understanding to this clause is no. Here, those 13.3 specified persons are not to be given the details here. It is to be given only those people who are under the management, according to managers. Except only that list is to be given. Then and 13.3, there is a separate clause is given for 13.3. Then next is commencement of activity. Now this commencement of activity has also become a very some complications are there because from 2001, a new system of registration has come, where new system of provisional registration has been given. So that provisional registration can be applied and obtained even there is no activity has started. And those provisional registration are given for 3 years. So then there is a renewal. Renewal will be whenever the already registration is there and 10AC registered is there. But when the provisional registration is there, you have to apply for regular registration. Now, regular registration is the provision is within 6 months from the commencement of activity. The application is to be made within 6 months from the commencement of activity, or prior to 6 months when the period of 3 years getting over. It means if the activities are not started even for 3 years, you have to apply for 6 months before. Now here, if somebody misses the date, then there are cases where commissioner exemption have rejected the applications because it is beyond the time limit prescribed, and even their systems were not accepting the such applications, so those were rejected. And particularly the old trust, which have their activities are already in continuation, and they apply for provisional registration, so they were waited for 6 months prior to 3 years, ending of 3 years, but as per the provision, within 6 months it was to be applied. Now, with this situation, many cases were there. So many people have even missed the 10A form, that is for re-registration. And then re-registration has been brought into cover now with the from 23-24 under 115 TD. There are 3 more editions where the renewal is not done, provisional is not regularized, or even after 5 AR renewal is not done. So those are, along with cancellation, 115 TD is covering those waivers. So that's why we made the representations. I think Institute has also made the representation, and they have issued circular number 6, wherein they have allowed all the trusts who have missed that 6-month period, or even their application is rejected for the purpose of not filing in time, and those who have not applied for re-registration, it is still available. It is up to 30th September. It has been extended. So people who have missed those or who have not done, they can take this opportunity and get the registration or renewal can be done that way. Now there is a question, what is the commencement of date? The commencement date, whether opening up bank account, whether applying for PAN card, whether receiving donation, or whether spending for the objects. I think the purpose of the trust is to spend for its objects. So till that spending is done, the activity commenced. This is my opinion, and I think it has been given in the guidance note also. So when you spend something on the object of the trust, now again the question arises whether establishments are the object of the trust or not. That we'll see later, because there another clause is there for that. So commencement of activity means when you spend for the charitable trust, charitable objects as per your trust deed, that is the time, that is the day from which your activity is commenced. Now, clause number 14. The clause number 14 is for that is I have covered. Details of place of books of accounts and other documents have been maintained. I think it is already covered by the learned speaker. Yeah, so clause 14 is details of place where the books of accounts and the documents are to be maintained. Rule 17AA prescribe books of account and documents to be maintained and kept. So both the things are there, where to keep and what is to be maintained. That is the rule 17AA says, and accordingly you have to maintain the books of account. And it is though the 10th August the notification has come for 17AA, but the amendment was done with effect from 1/4/2022. That is effective for financial year 22-23. So now there is a problem during the year whether it is to be maintained from 10th of August or from 1st of April. So far as practical solution is concerned, I think the trust should maintain or try to keep that books of account as per rule 17AA to the extent it is possible. And appropriate comment or observation is to be written that since it has been 10th of August, it has been brought. So far as we have tried as far as possible, maintained to that extent. Now, auditor has to report whether it is maintained at the registered office. Now, registered office, now what is registered office? Now, I think this 10B and BB is income tax provisions. So whatever address is there with the income tax department as a one final address, that is with the practically on PAN card. So that will be the registered address, registered with in the record of the income tax department. So far as 10B is concerned, that should be considered as a registered address. And accordingly, if it is maintained at that place, then you have to say yes or no. So if it is maintained at that place, then you have to say yes. If it is not maintained, then no. Thereafter, the second point says, provide the following details of books of accounts and other documents. So there, the auditor has to provide. And one more thing. Now, audit report has been made in two parts. In first part is where the auditor has to certify true and correctness of the Form 10B and 10BB annexures. And second part is the old one, the true and fair view of the balance sheet and income expenditure account. So now auditor has to certify that figures and details given in the 10B or 10BB form are true and correct. Now, certain clauses, it is beyond our scope. Certain clauses, we are not capable at valuation of certain benefits are given to the trustees or their relatives. So in such situation, wherever we take a view, that view is to be reported. Okay, on this ground, we have taken this view and that's why we are reporting this one. So there should be, because in both the part, true and correct also, they have given observations and qualifications, and fair, true and fair also, they have given separate observation and clarification. So at both the places, wherever it is applicable, you should give appropriate comment, your observation as an auditor or your qualification. One more point in the audit report. In the below the audit report, 3 points are given. 1 point says wherever negative report is given or wherever qualification is being given, the auditor should say reasons for that. So whenever we have to give the reasons for that or our explanation for that, why we are qualifying this. Now there is one more provision has been brought. That is new section has been added. That is section 1310. Now 1310, it's a system of computation in certain situations. What is that taxable income is to be computed and how the tax will be levied on that. So 1310, I will explain 1310 at this place only. 1310, it is somewhat beneficial provision because wherever there are 4 conditions rather, or 4 situations when the 1310 will come to play for a specific systems computation of income is to be worked out according to 1310 provisions. So one is not maintaining books of accounts, not filing ITR in time, or not filing ITR. Now the time 139.1 has been extended to 139.4 as well, means up to December we can file. But there is a question which I am covering now because 11.2 is still not amended. So section 13, it still says that whenever you are accumulating under 11.2, your return is to be filed in time. So this is the only condition where you have to file, because now deficit is also not allowed to be carried forward. And there was no provision that it is to be filed in time. So 1310, even audit report is not filed. And 215 is attracted. Proviso to 215 is attracted. So these are the 4 situations where if it is these, then auditor has to say whether 1310 is applicable. And there they have asked the questions, points, if it is not maintained, if books of account not maintained, if audit report is not filed. Now, how can we say audit report is not filed when we are finalizing the audit report? when we are writing those informations in the audit report itself, how can we say whether it is filed, not filed? So this is one question which is, according to me, is redundant, but that can arise later on. If it is not filed along with the return or given the time period, or it is filed late. So at that time, the question of 1310 will come. Another is, the fourth point is that whether it is ITR is not filed. Now, 1 month before the filing of due date, we have to submit our audit report. So there, this clause will not be attracted. So there we have to answer yes or no. So we can very simply say no, because that is not applicable. In fact, there are many places, I will request the chairman and committee, that some places there should be yes, no, stroke, not applicable. So wherever in such situation it is not applicable, it's better answer. Yeah.
We have noted, sir. We are already on this. We have noted in various clauses.
Yeah. I think you have already said in your opening remarks. My next point is advancement of general public utility. That is clause 15.
Clause number, please.
Yeah, I said 15. 15 of 10B. So, advancement of general public utility, because this is a section 215 is a charitable purpose, where from 1/4/2009, that is assessment year 9-10, proviso has been added, whether it is trade, commerce or business or its services. In that connection, it is issued, provided for any fees or cess, then that activity will not be considered as a charitable. That limb, it is applicable only for general public utility services. That is why, and the general public utility services is a residuary charitable purpose, who are not covered in earlier purpose, which is specifically explained in 215. So first of all, the auditor has to report whether any activity is in the nature of trade or commerce. So that we have to judge. Now here, before I go further details, that Ahmedabad urban development case is there. Supreme Court has defined or have given the fresh interpretation of business and trade and commerce, particularly for 215, proviso to 215. Under for income tax purpose, if what is the trade and commerce and how it is to be judged. The final judgment of the case is there. Now the applicability of proviso to 215 will be seen on the basis of profitability, or on it is to be calculated on the basis of the surplus made out of those activities. Earlier it was on nature base. Now it is become on earning base. Now they have said, if any organization is doing such activities and over and above the cost, they make reasonable markup, then to that extent, the 215 will not apply. It is not to be considered for the purpose of proviso to 215 as a business, commerce, etc. So now, court has not said what is the reasonable markup. Cost, yeah, fine. Cost is to be found out with the commercial, because earlier also CBDT has issued a circular where it said the income is to be computed on the commercial basis. And as such also the cost, even if you want to find out cost of any service or cost of any trade or business or commerce which is falling under that head, then you have to commercially calculate the cost and reasonable markup. Now, the word used is markup. Markup is percentage on the cost. At the same time, the margin is on sale price. So be careful. It should not be percentage of the sale. It should be some percentage of the cost. Means first you have to find out the cost, and then reasonable markup can be added. And if it is within that parameter, then the 215 will not be attracted. Now here, there is I have no judgment citation right now. Kerala High Court has said in one of the case, that in such cases, the markup or reasonable markup will be 10% to 15%. So as per, if we take that base, as per the Kerala High Court judgment, that is should be a 10 to 15% will be the reasonable markup. And one thing is very clear, that is a case is saying that 10 to 15%, but we have to see the reasonable markup as case to case. So, and there is a problem of subsidizing the services. One services you are charging more, one services you are giving less, one services you are giving free in the hospital or so. So there is a question whether we have to see activity wise. My opinion in this matter is it should be seen as a quad trust. Finally, the trust is coming out with what is the surplus to that, the applicability of 215 will be accordingly. So that reasonable markup, if it is there, then 215 will not apply. That is the AUDA, Ahmedabad Urban Development. But recently, one more case has come up where the Supreme Court has dismissed the SLP of the department. And that is the case of India Trade Promotion Council. That was delivered by Delhi High Court, wherein the Delhi High Court has said for this organization, if there is no desire to earn, if there is no desire to earn profit, but object to promoting trade and commerce, their object is to promote the trade and commerce, not for itself. Means is the surplus is not for itself. The trade and commerce is promoting for the nation. The word used is nation, and not for itself, but for the nation. Then that activity will be considered as charitable purpose. So here, India Trade Promotion Council case, as thereafter the Supreme Court, the department went for SLP, and SLP is dismissed. So now that's become the another different case for 215. So it is to be seen how these judgments can be up and seen thereafter. And all other details are to be given. What is the percentage? Because there is a 20% limit is there of the total receipts. If it is within that receipt, then it is not applicable. Those exempted categories to be calculated in percentage and amount, and figures are to be mentioned here in that. The most important is we have to say whether 215 is applicable or not. So that is the auditor responsibility, has to see that whether 215 is applicable or not, and whatever view the auditor is taking, whether it is applicable or not applicable, they should comment on that, on this view or on this base or on this case law. I am going to apply this, I am taking this view, and accordingly I am mentioning here yes or no.
Sir, can we conclude? Then we have to take a lot of questions.
Yeah, one just last point. There is a big two bigger portions in the 10B. One is voluntary contribution, and the second one is application of income. Application of income is going to be taken up by the Rajesh Bhai. But voluntary contribution I was allotted. I'll just take 2 more minutes, if you permit me.
Continue.
Yeah, the voluntary contribution, as per section 224, voluntary contribution in any nature is a income of the trust. Earlier, before there was amendment in that definition, that is long back. Now here, the auditor has to compute from all different types of income or donations. What is the income eligible or for the purpose of it? Means it's a total computation. This 10B or BB is a complete computation of income with the new amendment, new provisions and everything has been incorporated, and many details have been asked. Here they have asked 10BD, what is not in 10BD, whether there is a cash donation more than 10,000, whether ATG applicable or not, whether donations are given to not for a similar purposes. The other is to be applied. We have to give what is the normal rate contribution will be there, what will be the 30% that is anonymous donation, and what will be the MMR which is coming up. So this is a total computation. Only thing is juggling of figures. You have to find out from the trust and SSC what are the figures we want, what are the details are required, because it has been brought in the February, these forms have been prescribed. And up till 5th of September, the utility was not working or not available. In this short period, I think the extension is good one. 1 month given, we have 30 days more so that we'll be able to justice and we will be able to deliver that. And there will be a technical guide to our help and such lectures and such question answers will solve their problems. I think I have whatever allotted to me, tried to cover that, but it is too short, 20 minutes to cover so many provisions, but whatever was possible, we'll cover whatever question comes. Okay. Thank you, sir.
Thank you very much, sir. I now request our third panelist, CA Rajesh Mehta ji, to please start the deliberations.
Thank you, Ashwin ji. Respected Direct Tax Committee Chairman Sanjay Agarwal ji, Vice Chairman Piyush Chhajer ji, my co-panelist Deven ji and Vipin ji, and all my professional brothers. I am to discuss some of the issues relating to the application of income, some of the expenses which are not allowable out of application of income, business income of a charitable or religious trust, and 115 BBC. And at last, we will take up your queries. So please share screen the clause 31.
Control room, please, 31.
Yes, thank you. So the application of income, whatever the income derived from the charitable and religious purposes by the institution or trust, that has to be spent. So application of income has to be calculated by us. In this, the heading they have already shown that application of income. So all the amount which are allowable only are required to be mentioned here under this clause 31. 1. Excluding the application not eligible. So any of the application of income which is not eligible as per the provisions of section 11, 12 or 13 that are not required to be reported here. Total amount applied for charitable or religious purposes in India during the year, contribution or donation to any other person during the previous year. That amount has to be reported under this clause A. And object-wise application other than the application provided in clause A is to be mentioned here. So in addition to donation given to other persons, we have to mention all of the expenses which have been incurred for the religious purposes. If any of the trust is only for the religious purposes, Then whole of the expenditure which we have debited in the income and expenditure account, as well as any capital expenditure towards the religious purposes, excluding the donation to any other person, we have already included in the clause A. That amount is to be reported here in the clause 31(1) and this one. And here we have to bifurcate all the expenses, electronic mode and other than electronic mode. In the electronic mode, all the payments made through online payment system, BHIM, UPI, etc., as well as any of the payment made through account pay check or payment made through ECS or RTGS, etc., are also to be treated as electronic mode. And payments made in cash or other than through electronic mode, other than through account pay check, are to be mentioned in the column other than through electronic mode. Then expenditure for the relief of the poor. If the trust is for the purpose of charitable purposes, the object is the charitable, then the relief to the poor. Education, in case of charitable, the education is the object, then the education expenses are to be mentioned here. And the expenditure towards education exclusively for the education, as well as all administrative expenses, salary, etc., are also to be included under this head, because all of the expenditure which have been incurred directly or indirectly, capital or revenue for the education, are to be covered here. Similarly, in the medical relief, yoga, preservation of environment, preservation of monument, advancement of any other object of general public utility. And the last column they have mentioned like a residuary application which cannot be specifically categorized under this clause. So someone may think that any expenditure which is of religious nature, they will mention in the one, and remaining administrative expenses, salary, etc., they will mention in the clause 9. So I would advise that it is always right that any of the expenditure which is of salary or any other overhead, administrative expenses are also to be covered in the religious. Otherwise, this head clause 9 will become very much huge amount, and the income tax department may take up the case in scrutiny that any of the trust has incurred the expenses which are neither of religious nature and nor of the charitable nature. So the cases may be taken up in scrutiny. So we should take care in these clauses. So please go ahead. So please, yes. Please. So, and details of application out of clause 1A and 1B resulting in payment in excess of rupees 50 lakh during the previous year to any person. So they want to capture some data of the huge payments made by to single person during the previous year. So now this information has been asked from the auditor in the form 10B, the serial number, name of the person to whom the amount is paid or credited. Even if the amount has not been paid, but this is to be mentioned here, PAN of such person, amount of application, mode of application electronic, other than electronic, total. Then whether TDS has been deducted on payment made to him. If it is liable, then yes. And section under which the TDS has been deducted. So in the drop-down menu, various sections applicable for TDS are mentioned under the drop-down. So we have to mention the applicable section here. Then amount which was not actually applied during the previous year. So all the expenses, if we have included in the above religious expenditure and medical and relief to poor, education, etc., there we have included all the expenditure which are of the capital nature or of the revenue nature. But if any of the expenditure which have been debited during the year, but the remaining, it is such expenditure is remaining outstanding as on last day of the previous year, that is on the 31st March 2023, then that amount will not be allowed as per explanation to section 11. Which clearly mentioned that any amount which could not be actually paid during the previous year will not be treated as an application of income. So that amount will have to be mentioned here. Then for amount actually paid during the previous year, which accrued during any earlier previous year, but not claimed as application of income in earlier previous year. So any amount which could not be claimed in earlier year because it was outstanding, it was not applied in view of the section explanation to section 11, then such amount is to be reported here. So it will, even if that amount has not been incurred during the year, but that has been paid during the year, this will be an allowable expenditure. So this will have to be mentioned here. Again, in the clause 6, we have to bifurcate all the expenses which are the total in the clause 5. Here, all these expenditure are to be bifurcated in the revenue as well as capital. And then clause 7, amount invested or deposited back in corpus, which was applied during the any preceding previous year and not claimed as application during that previous year. So, as we all are aware that the Finance Act 2021 has made a provision that any amount applied out of corpus will not be treated as application of income, and this amount will be treated as application of income only when such amount is deposited back into the corpus. So that amount has to be mentioned here, because the year in which we have applied the amount out of the corpus in the any preceding previous year, but that was not treated as application of income, and during the previous year, if that amount has been deposited in the corpus and that amount should have been invested in the specified modes as given under section 11 subsection 5, then that amount should be mentioned here. Then repayment of loan or borrowing. And as regards the corpus, we must also keep in mind that such deposit back of the amount should be within 5 years and not beyond that. And furthermore, one condition has been imposed by the Finance Act 2023 that any of the amount which has been applied on or before 1st April 2021, even if the amount has been deposited in the corpus, deposited back in the corpus, which was applied before 1st April 2021, will not be treated as application of income. So that amount will not be mentioned here in the corpus schedule. Repayment of loan or borrowing during the previous year, which was earlier applied and not claimed as application during the previous year, during that previous year. So that some small drafting error in the specified format by the CBDT that they have mentioned here that during that previous year is word is double mentioned here. Repayment of loan or borrowing. Similarly, as applicable to the corpus, they have mentioned that any amount applied out of loan or borrowing will not be treated as application, but repayment of loan will be treated as application. So the year during the previous year, if we have made repayment of any of the loan or borrowing, that amount will be treated as application of income. But here same thing, if any of the amount has been applied out of loan or borrowing on or before 1st April 2021, then repayment of such loan will never be treated as application of income. So we must keep in mind that the loan or borrowing should have been of the period on or after 1st April 2021, and the application out of that should also be for the period on or after 1st April 2021. Amount to be disallowed from the application. So if any of the payment, whether it is a revenue expenditure or it is a capital expenditure, if TDS provisions have not been applied, TDS has not been deducted, then as per section 40A Roman 1A, 30% of the amount will be disallowed here. Then if any of the payment has been made in cash or otherwise then through account pay check, then as per section 40A subsection 3, these payments will be disallowed. So that amount has to be mentioned here. Donation to any fund or institution towards the corpus. So if any of the donation has been made to any of the other trust or institution which is registered under section 1023C Roman 4, 5, 6 or 6A, or under section claiming exemption under section 11 or 12. So donation to those trusts towards the corpus will not be treated as application of income. So that amount has to be mentioned here. Donation to any fund or institution not having same objects. Even if we have given any donation to any registered trust, but the same, please, again. Not having same objects. So even if we have given donation to any other registered trust, but the objects are not same, then that amount will not be treated as an application of income. So the objects, very important thing come here that if any trust is a religious trust, that trust is giving donation to another trust during the same year, but how we can check that both of the trusts are having the same objects? Because we are not to match each and every sub aspects of the object, sub objects, because the major object should be the religious. If the donor is a religious trust and donor is the religious trust, then our task is complete. We are not to see any of the sub objects. But if any of the trust is a religious trust or only for the religious, but that trust is giving donation to any other charitable trust for education purpose or for medical or for relief to the poor, then such objects will not be similar to the object of our trust or institution, because it is only for religious purposes. Then such amount will have to be mentioned here. Similarly, if any of the educational or medical institution is that trust or institution is exclusively for the charitable purposes, then that trust is giving donation to any other religious trust, then the object is not similar, because the donor is charitable, donor is the religious. That in that case, that amount has to be mentioned here in that clause 12. Now clause 13. Donation to any person other than any fund or trust or institution. So here very much a typical problem come before us. What is the amount? Because here earlier we are saying that donation to any other person is allowable. And here they are asking that donation to any person other than any fund or institution which are not registered under. So here I think if any of the donation which is allowable should not be mentioned here. There may be a situation for the 80G2B trust. Any of the trust which is allowed registration under section 80G2B of the Act. Any of the trust which is of the national importance, which is notified by the CBDT, being a temple, gurudwara, church or mosque for the purpose of 80G2B, then any of the donation received by that trust can be accumulated towards the corpus if could not be spent during the year. If they could not comply with the section 11 subsection 2, 85% could not be applied, then that amount they can voluntarily transfer to the corpus. But there is a condition that such amount should be spent towards the purposes of the trust which is registered under 80G2B for the repairs and renovation of the trust only. And that amount should not be given as a donation. Out of that corpus, we cannot give donation to any other trust. So in that case, such amount may be mentioned here because that will not be allowable. So only this will be a limited purpose of this clause. We must keep in mind. Application outside India for which approval has not been obtained. So if any of the trust which is claiming any exemption for the purpose of the trust outside India, but it is compulsory that such trust should obtain approval from the CBDT. Otherwise, that application will not be treated as application of income. So that amount will have to be mentioned in this clause 14. And any amount which is application outside India for which approval has been obtained. So here again a controversy comes. In the notified form, you will see that the income tax department has left this column. Here amount in rupees column has been left blank. Here amount word is not mentioned here. But in the utility, they have mentioned the amount column also, and that utility is aggregating that amount. So the controversial column are the clause are the Roman 14 and 15. So here we must keep in mind, if that approval has been obtained and the application is allowable, the amount is allowable, then we should not mention any amount here in the utility. Otherwise, that amount will become disallowable. So if approval is obtained, we are not required to mention here. Only the disqualified amount is to be mentioned in the clause 14. Applied for any purpose beyond the objects of the auditing. Similar thing, if any of the trust is having religious objects, but they have applied for any charitable object, or any of the trusts having charitable object but have spent their money for the religious object, then such amount has to be mentioned here. Any other disallowance is to be mentioned here, total allowable application. Then clause 19, amount deemed to have been applied during this year. So if any of the amount which could not be spent due to two reasons, if any of the amount has not been received, say for example, the FDR interest has been accrued, then FDR has been made for a period of 5 years. that amount will be received by us after a period of 5 years, so that we cannot spend. So as per section 11(1), clause 2 of the explanation 1, we can furnish form number 9A, that whenever the amount is received, then we will spend that money within the year in which the amount is received, or just a subsequent year in which the amount is received, or for any other reason. So if for any other reason means if amount was received, but may be possible, as we have already told, that if any of the amount has not been paid at the end of the year, that will not be treated as application of income. So if any of the amount is outstanding as of 31st March 2023, or for any other, we could not, any other reason, say for example, the donation of rupees 90 lakh was received as on 31st March 2023 itself. Amount was deposited into the bank, but we could not spend because it was received at the fag end of the year. So we can spend that amount in the subsequent year, even if it is received. So for any other reason, this is second clause, we can furnish form number 9A, and if we have furnished form 9A for any other reason, then amount has to be spent in the immediately subsequent year. Otherwise, it will become taxable. Then clause 20, income accumulated as per explanation 3 to 3rd provision or in 11 subsection 2. So if any of the amount has been accumulated in by way of furnishing form number 10, that will be allowable. Even if it could not be spent, we can spend that money in the next 5 years. 15%, the gross amount of the income derived from property held under trust, all voluntary contribution, all other rental income, FDR interest received. Out of this, 15% is allowable to be set apart for future for unlimited period. That amount has to be mentioned here. So this is clause 31. So now please clause 37. So please go to clause 37. So here the application out of income of the following sources during the previous year. So these amounts are not allowable expenditure. During the year, even if we have made any payment, but these are not allowable because either we have claimed it in any earlier year or it is not allowable as per the provisions of the income tax section 11. Then clause A, income accumulated under 1023C 3rd provision or 11.2. So if we had furnished form number 10 in earlier year, so that amount has, say for example, we had furnished form number 10 before 2 years. So that amount was already treated as application during that year. So any amount spent out of that accumulated amount during the previous year is not an allowable, but we are to mention here the payment made through electronic mode or other than electronic mode. Income, because if that accumulation is not spent through electronic mode, that will again become not allowable. Income deemed to be applied in any preceding previous year. So here, if we have furnished the form number 9A, that amount has already been treated as application of income in deeming fiction in the earlier year. So that amount has to be mentioned here. Income of earlier previous year up to 15% accumulated. Because in any of the previous year, we have accumulated 15% and any amount spent during the previous year out of that 15% accumulation will also not be allowable, but that has to be mentioned here. Corpus fund. Corpus, any amount spent out of corpus is not treated as application. So that is to be mentioned here. Any amount application of income, any amount applied out of borrowed fund is not treated as application. That is to be mentioned here because that will be treated as application only in the year of repayment of the loan. So this is 13. So now please come to the clause 17. Because 15 GPU has already been taken, clause 17. Yes. Whether the auditee has any business undertaking as referred to in section 11 subsection 4. If any of the trust is for the charitable or religious purposes, that trust is having any business undertaking, then first of all we have to see that business undertaking should be incidental to the attainment of the objective of the trust. Then only its income should not be included and it will be treated as application of income. Nothing will be disallowed out of section 11 or 12. But we have to mention here the information regarding that business undertaking, nature of business undertaking, business code, whether separate books of account have been maintained for the business undertaking. So even if that business is incidental to the attainment of objective of the trust, the separate books of account for the business undertaking is compulsorily to be maintained. If books of account are not separately maintained, then that business income will not be liable for exemption under section 11 or 12. So we have to mention here yes or no. Income from business undertaking for the previous year, which is not to be included in the total income. So any allowable income as per the section 11.4 has to be mentioned here. However, section 11 subsection 4 states that the assessing officer is required to compute the excessive income which is shown by the assessee, because the business income of the charitable or religious trust is exempt. So it may be possible that the said business or said trust will show it excessively, excess income over and above the genuine income. So the assessing officer to compute. But here, since we are required to report, so it is our duty to compute the genuine taxable income. So first of all, we will have to obtain a management representation. And then we will have to compare the GP rate and net profit rate of that business of last 3 years, and all the expenses debited and all the income, whether all the sales and services provided are the genuine. Then only we should report that this is the business income which is liable to be covered under this 17D. If any excess income is shown, if we see that any of the services has not been provided by the assessee trust, may they have purchased some of the capital asset, and that capital asset is not found at the business premises of that trust, then we may certainly mention that these assets are not available, so depreciation will not be allowed, or it will not be treated as application of income. Then such amount will have to be mentioned at 17E. So excess amount shown by the assessee trust will have to be mentioned here, which is over and above the genuine income. However, this task is allotted to the AO, but we are to do. Otherwise, this column will become infructuous. So it is our duty to compute the genuine taxable income. And then clause 18, whether the auditee has any income being profit and gain from any business as referred to in 7th provision of 1023C or 11.4A. So here also we are to give the details of the business undertaking, and we have to mention whether separate books of account have been maintained or not, and whether the business is incidental to the attainment of object of the auditee. So if any of the trust which is doing any, say for example, any of the temple, that temple is selling the milk and other dairy products also. So the religious trust is not required to sell the milk or the other dairy products. Then said income will not be incidental to the attainment of the objective of the auditee. So that we will have to mention here yes or no. If it is no, then such business income will not be eligible to be excluded from the income. That will be liable for tax as per section 164 subsection 2 of the Income Tax Act. Then clause 19. Clause 19. Yes. Details of receipt of the auditee on which tax has been deducted at source under section 194C, 194J, 194H or 194Q. So here we are to report only these 4 sections only, 194C, 194J, 194H and 194Q. Any of the trust has received any of the amount. This reporting is first of all required only in the case of the trust carrying on the business. If any of the trust is not carrying out any business activities, then this clause 19 is not required to be reported. So because they have asked for the details of only the sections which have business receipts. If any of the trust is providing services of a contractor or building construction to anyone, they have received 194C payment. Trust is providing any professional services, trust has received any commission, or the TDS of trust has been deducted under 194Q on sale of some goods the buyer has deducted. So these amounts are to be mentioned here. So only these amount in case of the business undertaking are required to be reported here. Name, 10, etc. are to be mentioned here. And here we are also required to mention again whether separate books of account have been maintained for activities or income received, which is mentioned in column number 10. and income or receipt in column 7 or 8, which is from business incidental to the attainment of the objective. So here again, we are required to report which is the business which is incidental to the attainment of the objective of the trust. So these business reporting are required to be done by us here. May be possible that the TDS of any of the trust has been deducted under section 194A on the FDR interest or under section 194I on the rental income of the trust. That 194A and 194I is not required to be reported here. So this is the clause. Now I would request you to please take clause number 23 Roman 6. 23 Roman 6. 23.6 is regarding the 115 BBC.
Mehta sir, concludes होगी क्या आपकी clauses?
हाँ सर, बस ये within 2 minutes I will conclude, sir.
Okay, sir.
115 BBC. This is the last clause. So under 115 BBC, very much confusion remains there many times. That any of the anonymous donation received by any trust is taxable under 115 BBC, but this is not the correct position. If any of the amount has been under clause A, donation, anonymous donation referred to 100 in clause A. Anonymous donation 115 BBC 1 clause A. Here, first of all, if any of the charitable institution which is carrying out any medical or educational activities only is required to report in clause A. If the aggregate of the donation being 5% of the donation or 1 lakh, whichever is higher, that will not be taxable under 115. Any amount over and above 5% of aggregate donation or above 1 lakh, whichever is higher, will only be mentioned here under this clause A. Then clause B. Clause B specifies any of the trust which is established only for religious purposes only and not for charitable purposes. Then any amount received by the Holy Religious Trust is not taxable under 115 BBC. So that amount is to be mentioned here. So in clause A, any amount of 5% or 1 lakh is to be mentioned in clause A. That amount will not be taxable. Clause B, that amount is to be received by religious trust to be mentioned here. That will not be taxable. In clause C, amount of anonymous donation not taxable under the 115 BBC on account of applicability of 115 BBC subsection 2 clause B. So here any of the trust which is for both purposes, religious as well as charitable purposes. Then if any of the amount which is received by the trust towards religious purposes, then that amount is not liable to be 115 BBC. Say for example, any of the trust is for the religious as well as charitable and medical and education activities also being carried out by that trust. If the donor has already mentioned that I am giving this anonymous donation, but this donation is not towards medical or educational purposes, then such amount is to be mentioned in this clause C, which will not be liable for tax under 115 BBC. So last clause D of this Roman 6 come here, other anonymous donation. So only this amount is liable for tax under 115 BBC at the rate of 30%. Here we have to mention all the donation which is taxable as per section 115 BBC. So which are those amounts? Only that any of the trust or institution which is carrying out charitable activities or carrying out religious or charitable activities. Any anonymous donation received by such a charitable trust only towards educational and medical purposes which is anonymous, that amount is liable for tax under 115 BBC. So that is to be mentioned here. So this will be only the, however, they are mentioning here the total A, B, C, D, but A, B and C will not be taxable, only D will be taxable under 115 BBC. So this is my, however, many of the things have been left, but because of some given time, we could discuss so, and in future also, again, we will be discussing some of the important whenever.
Thank you very much, sir. Now it's time to take up the questions of the members received at ICI portal. I request all the panelists one by one, kindly take up the questions segregated to them by the control room within 4 to 5 minutes so that we may conclude this session, this program well within the time. I request Devan B. Shahji to please take up their queries first. queries of the members.
The first question is, please clarify whether parties covered under 13.3 are required to be reported even if there are no transactions which such party during the previous year. Yes, there is no requirement that only a transaction needs to be reported. In 13.3 specified persons, only transaction is to be given if it's a substantial contributor. Other than that, you don't need to. So it has to be reported. Then a charitable trust is having a large number of trustees, and the list of specified burden meaning of 13 will be very lengthy. So should an auditor do in such a situation? Okay, many trustees are reluctant to furnish the details. I think if this is going to be a general query for most trusts and most cases where large trusts are there, I think what has to be done is take the certificate as referred to. I refer to the circular number 143 dated 20th August 1974. Use the data that is there in 10A. Use the data that is there in 10BD, sorry, and also the FCRA return that have been filed for the earlier years. Ask the assessee to compile the detail, give it to you. If he is not giving beyond a particular number of years, you please mention the is given in your audit report observation column, and then go ahead, because you cannot take the onus of the trust on your head, because if tomorrow for whatever reason there is an issue, it will be your responsibility, because you are signing everything as true and correct, and true and correct is a big onus that was given on us. Third one is whether salary. Yeah, this is related to a salary of a person, and whether if we don't know whether it is reasonable or unreasonable. Well, in this case, I completely agree. You cannot justify whether the salary is reasonable or unreasonable. What could be done is, suppose there is an employee as a principal and a trustee, and the principal is drawing 3 lakhs and a trustee is drawing 5 lakhs a month or 6 lakhs for coming only 1 or 2 hours a day. Then probably you have to look at the reasonableness and unreasonableness. Otherwise, you have to look at the market precedent and give necessary comments, and take a representation from all the trustees stating that the salary being paid to the person is commensurate with the market rate. Yes, sir. My
Thank
three
you, sir.
queries were there. Thank you.
Now I request another panelist, CA Vipin Bhattacharya ji, to please take up their question related to you, sir.
Next question to me is, it is in fact a suggestion for the technical guide, but there he has mentioned that after the sentence where the auditee following the sentence should be included, in such a case auditor should verify that the application for the final registration is made at least 6 months prior to the expiry of the period validity of the provisional registration. The law is very clear.
Noted, sir.
Next.
Then next is kindly cover the situation where the trust. The next is ATG 5, where that says whether the trust has commenced the activity. Say provisional registration has been granted to you. Then in that case, you are entitled for claiming exemption for 11. And even ATG also can be claimed and given. Only thing is the question will arise if it is rejected. ATG is not approved, then it will be withdrawn, or it will not be allowed from the day it is provided ab initio. So there will be a problem for that trust suffering for that. But he has suggested some commencement of activity, all which we have already covered in the lecture. Then kindly cover the situation where the SSC has more than 40 units and the accounts of each unit are maintained, independent cash book, ledger on the cloud, and vouchers records are kept, and each unit are kept vouchers. So the form requires if it is maintained other than registered address. Whether it is in cloud, whether it is in computer, whether it's handwritten, or whatever manner it is maintained, you have to give the details for the places other than registered address if it is maintained. So those details very clearly they have asked, and those details are to be filled up in tabular form. So even if the 40 units are there, if it is at the one cloud, one place, then it can be considered as a one place where those address and details can be given. If corpus, next is if corpus utilized for main object of the trust to give education loan to students, how to show the loans appearing in the balance sheet. I think this is a question beyond 10B, 10BB, but I will try to explain. See, when the loans are given to the students, first of all, your trust deed should permit it. Second is, if you have given the loan to that, it can be claimed as application of income. So if you claim application of income, whenever you receive that loan back, then you have to take as an income of that year. That is possible. Another thing is, if the corpus is utilized. So if it is an opening corpus, if it is utilized for the loan, then claiming application will be a question and problem, because it's not out of the income of the current year. So the application should be out of the current year's income. So if it is opening corpus, then it is not to be treated as application. Rather, if it is current year's corpus, then if loan, then there is a great problem. 11.1D also you will not get, because of now investment is not there in 11.5, and application is also not allowed, because the year in which you will replacement in the 11.5, in that year you will get it. Yeah, I think these were the 4 questions.
Thank you, sir. Now I request CA Rajesh Mehta ji to please deliberate the questions related to you, sir.
Yes, sir. So one of the query is that whether we are required to mention the amount which is not actually paid in the clause 31(1)(b). So if any of the amount which is not actually paid is all to be required to be included in the clause 31(1)(b), because clause 31(3) already asked for the detail that amount which was not actually paid, that amount will be reduced out of the application of income. Then therefore we are to include it in the 31(1)(b). Then second query allotted to me is relating to the amount of rupees 50 lakh paid on 31st March 2023 to the school bus supplier, and check was honored by banker and bus was delivered on 15th April 2023. So how we can comply with section 11.5? So there is no need to comply with 11.5. That amount being given to the school bus supplier of rupees 50 lakh itself will be treated as application of income. There are so many of the judgment that any of the amount paid as advance is treated as application of income. So this will be treated as application of income. Then next query. As per section 11.2, if 85% income is not applied during the year, the trust can invest balancing amount in mode specified under 11.5. No need to clarify when is the investment in mode is to be made. So the investment has to be made on or before end of the previous year, that is up to 31st March 2023. If any of the amount could not be spent, could not be invested during that year, then we have to apply in the form number 9A or form number 10. Therefore, it is not applicable to be invested up to ITR filing due date. So please, these are the three queries allotted to me. So thank you, sir.
Thank you, sir. Now I request the chairman, Direct Tax Committee Chief Moderator, to please take up the general queries and also ask the relevant queries to the panelists who have covered the clauses.
Looking to the time constraint what we have today, what I think that we need to have one more session, because at present we have more than 2,700 viewers, those who are continuously attached with us, and it will not be fair at that time to take some of the queries. So what I have conveyed to Ashwini ji, you are requested to please say it and then try to conclude the session, because it is around, we are 8 o'clock already. So with this, we are going to have one more program in the month of the October, where as already said that we'll try to answer everything. Few of the general queries which have been already covered by the speakers or the panelists in their deliberation, that will not cover in this, but rest of the things we are going to cover. The one query, whether the gross receipt or total income is to be covered in arriving 5 crore. So the gross receipts are there. Then in that case, there is no question of total income there. The 5 crore is the receipts, which includes the voluntary receipts and the other receipts which are related to business or otherwise. Then last one is about whether charitable trusts are required to follow the cash system of accounting or it can follow mercantile system of accounting. It is the choice, but issued of chartered accountant have issued one publication for the purpose of other entities which will be applicable from next year. Then in that case, we are advising that you should follow the mercantile system of accounting. The companies, those who are Section 8 companies, if they are registered under 12A or 1023, they are mandatory required to follow the mercantile system of accounting. This issue we have already clarified in our technical guide also. So with this, I request Ashwini ji to take the matter to conclusion and final words from my Vice Chairman thereafter.
Thank you, sir. I would like to extend our heartfelt gratitude to our esteemed panelists, CA Devan Shah ji, CA Bipin Batavia ji, and CA Rajesh Mehta ji, for their comprehensive coverage of most of the clauses in Form 10B as well as 10BB. As outlined by the esteemed Chairman of the Direct Tax Committee, CA Sanjay Agarwal ji, during his opening remarks as moderator. While time constraint prevents us from delving into all the clauses, we are committed to ensuring a thorough understanding of the remaining ones. We will plan forthcoming webinar to cover these pending clauses with a decision to be made by the chairman after the 30th September. To conclude this enlightening session, I now invite CA Piyush S. Shajjar ji, Vice Chairman of the Direct Tax Committee at ICI, to provide his closing remarks.
Thank you very much, Ashwini ji. Once again, thank you very much. Very good evening again. Late good evening, I would say, to all the participants. My special thanks to Chairman Sanjay Agarwal ji for being on the panel for the continuous 2 hours and guiding us, all the members, all the participants. My thanks to the panelists for the day for covering, of course, in a very limited time. It's very difficult to cover this topic. But to do a justice in a limited time can only be learned from this panelist, I can tell you that. So thank you very much, Devan Shah ji, Bipin Batavia ji, Rajesh Mehta ji. In fact, there is a message from Bipin ji also, that if you want, we can take your questions for 10 to 15 minutes. But Bipin ji, questions are too many. And I think so 10-15 minutes would be very short. And as promised by my chairman, that whatever questions have come, we'll try to answer those questions also, maybe in another session after 30th September, when people are free from the tax audit. And you believe me, that the questions will be double after the tax audit is out of the mind. It will go ahead doubly. I'm dead sure about it. For the benefit of the panelists and all the participants, there were around 2,900 members which were live watching this. In the last moment itself, there were 2,900, which speaks about the importance of the subject and more about the importance of the panelists. It is a panelist which actually pulls the crowd. So thank you very much once again with such a short notice. We, all the panelists, my request at the DTC will disturb you once again. And my request to all the participants, when you have heard today, obviously 20th was the last date if you want to give the comments. With the permission of the chairman, if anything you want to give by tonight, please do give it over tomorrow early morning. Any comments on the technical guide, we'll try to look into it. I'll tell my office also to look into it and try to incorporate that if found to be in order. At this stage, I would thank very much to our team of DTC, who is working day and night in finalizing this technical guide. They have been studying line by line, compiling every information. Whatever suggestions are coming, they go through that, they incorporate it, again discuss with the chairman. So it's a mutut task, especially considering the type of the form which it has come. So very much thank you to the team DTC. Thank you all. Good night.
Vice Chairman, boss?
Yes, sir.
I think, yeah, one minute.
Yes, sir.
Just a second.
Yes, sir.
Yeah,
I
just
want
a
to
minute.
say-
Vipin bhai. Yeah,
Vipin bhai,
Vipin bhai,
1 minute, Chairman sir as well. Yeah.
As you have suggested, the time was given for today. Since when we issued the email, at that time the extension was not with me. So we give the time till Saturday. So whatever suggestions and these queries which have come to me, I'll try to incorporate in this, or we may think later on after the Saturday that if we need to issue a FAQ with these questions, if that cannot be incorporated therein, or we are going to put these issues in the one of the email provided by the department in respect of the queries to be given in respect of these forms. We'll shoot those queries in from ICI side in those email, and we'll try to get it from them also the answer to this question. Now over to Vipin bhai, he wanted to say something.
Yes, Vipin ji, please go ahead. Thank you, Chairman sir.
Yeah.
Thank you for extending time.
Yeah, thank you, Chairman Sarji. I want to suggest the queries, because 2,900 members are attending and waiting for their answers. I suggest, if my two co-panelists agree, we can answer this question. We jointly prepare that and send it to institute, so that institute can either reach them or put on the website, so that those people can get their answers. So we can do
Sir,
that. I suggest that we
Sir,
submit our answers to that.
Sir, with all due respect, not only these queries which will come in the coming 4 or 5 days, that will also be forwarded to you 3 people only. So you
Thank
have
you.
to answer
I will
also.
answer.
So not only the
Thank
query
you.
which we have received today, you have to also answer the queries which are received till Saturday.
We will certainly.
Thank you, sir. Thank you very much.
Thank you very much once again, Chairman sir. Shall I conclude with your permission, Chairman sir? Thank you very much. Thank you all once again. Thank you all the participants for your patience hearing. Thank you. Tech team, my request to please stop the recording.